Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about the possible ending of one of the greatest bromances of all time, plus the implications that has to a particular car company. As well as that, I want to talk about how the ECB shows the Fed how it's done and the implications of that, plus how all eyes are on the big non-farm payroll report due tomorrow. But, oh, hi, by the way. Hello there. Nice to meet you. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. With that out of the way, let's get started. So yes, one of the main headlines today was the title, Kill Bill. And this leads me to the question on whether or not we are seeing the end of one of the greatest bromances of all time. Because I don't know. Because what has happened today is that it does appear that Elon Musk has done a complete U-turn on his opinion, because he has basically slammed Donald Trump's big, beautiful tax bill. This is what he had to say. I'm sorry, but I can't stand it anymore. This massive, outrageous, pork-filled congressional spending bill is a disgusting abomination. Shame on those who voted it in the House. I work for hello there. Hello, Ahmed. I don't know, buddy. I'm just a live YouTube channel. I'm obviously I work for OneRoyal. So nice to meet you anyway. I hope you're good. Hope you're well and having a good day. Like I say, yes. So yeah, shame on those who voted it in the House. In fact, he then said this. Call your senator, call your congressman. Bankrupting America is not okay. Kill the bill. Now, you need to remember that Musk has been a clear supporter of President Trump and the Trump administration from the very beginning. He was running, Department of Government Efficiency, where he made loads of, apparently tax cuts. He was very important part of the administration, very important part of this administration. So this is for him to speak out this vocally in reference to his disgust on this big, beautiful bill, which Trump is extremely proud of, and it's part of his main, driving factors, what is that and tariffs, of course, is a very change of heart, because Musk was Trump's biggest supporter. So you have to ask the question, is this statement or this complete U-turn a change of heart or panic? Because part of what this bill does, okay, is it holds up the EV tax credit. It's basically in limbo. So this greatly affects Tesla. And let's face it, Tesla has not had a good year at all. Bear in mind, Musk's overall involvement or verbal involvement in the Trump administration, okay, and his basic involvement with obviously the Department of Government Efficiency as well has upset a lot of people. And it has upset a lot of the Tesla buying public. Don't forget, European sales have dropped dramatically in Tesla purchases. Tesla has had a really bad 2025. From the highs it reached from when Trump took office or when Trump won the election, it has completely reversed all those gains. You know, you have other EV making car manufacturers catching up, like BYD, which is outselling Tesla in Asia and in good majority of many other countries as well. So this is why he is almost panicking about this tax bill. This is why he's talking about this tax bill, because it greatly affects his company, which is already under pressure. Don't forget, when Tesla was struggling, he asked his best friend, the president, Donald Trump, to show off Tesla on the White House lawn like it was a car showroom. But this is a complete change of heart, complete change of direction. And what's this going to do to their relationship? Well, only time will really tell. But this is the first time he stood out. And the White House have said they have been caught off guard quite a fair bit by this outburst by Musk. But clearly he's doing this out of panic because Tesla is in trouble. And it's not just because, yes, it is being because of his political involvement and, you know, his popularity, but it's deep rooted in there as well. Very much deep rooted, more deep rooted than that. It's the simple fact that their production line hasn't improved or increased. You know, they've done a cheaper Y model by all means, but it's not keeping up now with the competition. I know he's invested a lot of money into robo-taxis, which is the big thing he's counting on, which we'll find out in the coming weeks if it works. Plus the little iRobot servant things he's developing as well. But for now, Tesla is a car company and it is greatly struggling. And indeed, unfortunately, the pressure is continuing as well. Before we have a quick look at the market and look at Tesla as well, because Tesla I've been talking about for a long time. I've always considered it slightly overvalued as well, not just because of Musk's antics, but because of the actual company itself. But anyway, we'll have a look at the market at the moment. But something else I want to quickly talk about as well before we move on to that. The ECB has shown the Fed how it's done. Because basically the ECB has cut rates for the eighth time within the year. Interest rates now lie at 2%, the lowest level since 2023. Now, the reason behind the decision, ECB have said, is because of slowing inflation and threats to the bloc due to President Trump's trade war. Now, here's the thing. It's not just about the ECB, their decision, but here's the thing. This is probably why Jerome Powell at the moment, the chair of the Fed, is looking across, you know, the Atlantic Ocean and hating the ECB at the moment. Obviously hating the ECB at the moment, because all this is going to do as well is it's going to give Trump more ammunition to attack Powell and the Fed for not cutting rates. It's going to give him far more ammunition on that for not cutting rates. Because already Trump has called Jerome Powell a loser, Mr. Too Late. You know, especially yesterday after the ADP report came in, 2-year low, the lowest level in 2 years. Straight away, Trump didn't want to take responsibility for it, saying it was because of his tariffs and his trade war. No, it's Powell's fault. So the fact that the ECB's done this, Powell's probably very like, he's just going to let Trump attack me again more with that. But anyway, let's have a quick look how the market has opened. I do want to talk about the job market, which is what I want to talk about in a moment. Like I've already mentioned, the ADP report yesterday came in at a 2-year low. Shocking, and what that means for the up and coming data later this week. But anyway, before we go into that, let's look at the market, see how the market is open, because the market's been open now for 40 minutes or so. So let's start off, obviously, like we always do, with the S&P 500 ticking slightly lower today at 0.25%. Don't forget, the S&P had its best May in 30 years. That was down to the taco trade. For those of you who are not familiar with what the taco trade is, by all means, go back and have a look at the video I did 2 days ago where I discussed the taco trade and why the taco trade may now be over. As well as that, the NASDAQ as well. See how the NASDAQ is open today. Again, ticked slightly lower, nothing dramatic. I think mainly this is really down to concerns about the job market, which we're going to talk about in a moment as well. Slightly negative, 0.16%. If you look at the Dow, again, down 124 points. Big drop on the open, as you can see, negative 0.28%. If we look at the Mag 7, now don't forget the Mag 7, Magnificent 7, is indeed the driving force behind the S&P 500. Let's look at Tesla first. Let's look at Tesla first. As we can see, following, obviously, we knew it was negative in the pre-market. It's been negative all year. Pretty, it's been on a lot of pressure. Opened dramatically with a gap below, gap downwards. Currently trading negative 4.91%. So 4.91% is down so far for today. If we have a quick look at the performance so far this year to date, it is down around nearly 20% this year. Down very, very negative. Like I say, it's not had a good year. We have a quick look at the season as well for Tesla, because Tesla, I'm keeping a close eye on. Like I say, where is it? 2025. Here we are. Negative. Very, very having a very bad year. Again, like I say, though, this is not just because of Musk antics. I think it's the actual intrinsic value of the company damaging it. So look, carry on with the rest of the Mag 7. Meta is currently down only by a little bit, 0.6%. Microsoft up slightly, 0.24%. Amazon, again, 0.97%. Alphabet up slightly, 0.47%. Nvidia, who was the savior of the market in many ways last week with his earnings, slightly down today, 0.39%. And another company which I'm keeping a very close eye on as well, which I have got a slightly negative outlook for, which is Apple, which is down currently 0.56%. But I'm keeping a close eye on Apple because, again, like Tesla, it's the actual value I'm keeping an eye on. Reason being, I think there's a lot of issues with, obviously, the tariff and trade war, where the manufacturing of iPhones and iProducts are being made, which is mainly China. They were looking to move production to India. Of course, then Trump threatened 25% tariffs on Apple if they don't make their products in America. But I think it lies a bit more deeper than that. I think there is, like Tesla, maybe a bit too slow to move with the changing market. So I'm keeping a close eye on Apple. Apple for the year, actually, is also down 0.16% as well. So almost 20% as well this year. So yeah. Anyway, I want to move on to something else. I want to discuss the job market. Yes, the job market. Because yesterday, as I already mentioned, the ADP job report was announced at 37,000. Expectation was the number to coming around 115,000. Now, this, of course, is a 2-year low. Now, not good, obviously. Now, as well as that, initial claims, which came out today as well, which is also really important. Don't forget, that's the number of people initially signing on for unemployment benefit in in the United States. It came in at 247,000. Expectation was around 235, so higher than expected. But more worrying than that, it's the highest number since October the 4th, 2024. So that's 8 months. So ADP, 2-year low. Initial claims, highest since the highest number in 8 months. Are we beginning to see signs, finally, of the damage the tariffs and trade war is doing to the US economy? Are we finally seeing signs of this happening? That's a good question. Again, I covered that in yesterday's broadcast, so I'll go into a bit more detail, so feel free to check that out. But because of this job data, and look, don't forget, the initial claims, I often look at it like a early warning, like a canary in a coal mine. When we start seeing it steadily grow, it's like an early warning that things aren't so good. But anyway, because of all this, big attention now is on the non-farm payroll. Now, there's some people believe, I, for one, do not believe there is a correlation. Some believe the ADP and the NFP are correlated. So if you get a bad ADP, you're going to get a bad NFP. In my time, I've never really seen that correlation, so I don't believe in it. However, it does mean this has got more attention than usual. I mean, NFP is a big deal anyway, but I think because of this negative job data, I think NFP is going to be a big deal. Expectation is for it to come in 130,000. Previous reading was 177,000. Now, because of this, I will tomorrow, with my live broadcast, decide to do a watch along of this event. So please feel free to come and join me, because basically what it is, I go on 15 minutes before the event. We talk about it. We discuss potential scenarios, what it means, and then we watch the market as this data comes out. So please feel free to join me tomorrow. It's going to be at I'll start at 12:15 p.m. GMT. The event's at 12:30 p.m. GMT. So feel free to come and join me for that. Anywho, moving on, I think that means now it's time for a currency update. Right, yes, it's a currency update. Let's have a quick look, see how the currency market is doing. Obviously, we've seen the dollar, under a lot of pressure over the last couple of sessions. We are seeing a weak dollar. Still remains the same. Okay, as you can see with the euro there, we're currently trading at 114.74, up by 0.50% against the dollar. Don't forget, the dollar is set by the sign of things to have the 5th month of losses. 5th month of losses against the majors. We can see the same with the cable as well. British pound, US dollar, currently trading just under, as we talk, big psychological level of 136. So currently trading at 135.96. And we can look at the dollar yen as well. Again, under pressure, currently trading around 143. If we look at the dollar index, you can see we're still trading under 99, currently trading at 98. So we are looking at a weaker greenback across the board. And this is obviously down to the fact that lack of confidence in the current situation in the United States, and the fact that there are many people out there who want a weaker US dollar. And of course, it would be one of my broadcasts if we didn't talk about it. My favorite asset of all, the asset I tend to love the most, of course, which is gold, currently trading around $3,380. So again, benefiting from a weaker dollar, but also benefiting at the same time from the safe haven status and, obviously the uncertainty going on in the market. Still very much trading way above that trend line. First real key resistance for me is I'm keeping an eye on potentially is $3,447. Reason why I say that, because that does look a bit like a double top to me. So that's my only concern for the LML. Anywho, the rest of the week, we still got a day to go, of course. We still got a day to go, full of data. And we have, of course, obviously, EU GDP tomorrow, EU retail sales, and the big one, which I will be doing a watch along with, which is obviously the US non-farm payroll. Don't forget, this is a live show, so you can ask me questions anytime you like, or you can say hello, or more importantly, what I really like to hear is your thoughts, your opinions. Let me know what you think. So I like to hear your ideas and your thoughts, because, like I say, it's a market commentary show, so I like to hear what you're trading or what your opinion is. Do you think Tesla has got more ways, further to fall? Or is Tesla going to pull it out of a hat with their robo taxis and their iRobot type robot things? And how about Apple? What's your opinions on Apple? Is gold going to go all the way to 3,500 this year, or have we seen the bull run of gold finished? Let me know your thoughts. Let me know your opinions and what you think about that. As well as that, of course, if you're not a member of the OneRoyal family and you wish to know more about us, by all means, click on the little link in the description below. You can find out a bit more about us. And like I say, check us out. As well as that, I know if you're watching me on YouTube, of course, and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you like this sort of content that you've put up with me, my over-the-top, my eccentric, enthusiastic approach to talking about the markets, by all means, give me one of these. And as well as that, like I will say on a further note, I have noticed a lot of people go back and watch the recordings, okay, which is great. I love any type of support for the little show. And if you do have a question or a comment, put it in the comment section below. I will see it and I will reply to it next time I go live on air, which of course will be tomorrow, when I'll be doing a watch along of the non-farm payroll. So please feel free to come and join me for that. Okie dokie. Okie dokie. If there is no questions, not to worry. Leaves me to say, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.